All right, we're already starting with PK. All right, ladies and gentlemen, welcome back to No One Asked Us, episode 32, with Mina Samaan. Mina is the current chief financial officer at BeSmartee and has spent over a decade and a half in finance, primarily with software companies. He was last with Lawn Starter and also spent time at Groupon. Mina, welcome, and thank you for being the first CFO ever on the show. So we'll be interested to see where this conversation goes. Mina, the joke we always make is like, no, little boy or little girl, as a child, is like, when I want to grow up, I want to be a CFO of a tech company, or I want to work in mortgage tech. And specifically, you said before the show, you're hoping that you don't always work in mortgage tech. Talk about like your route. I mean, obviously, you have a degree from University of Illinois, but really right out of the gate, you were pretty much, in the tech space. And do you mind talking a little bit about like how that happened and how that came about?
Yeah, no, absolutely. First, thank you guys for having me. It's a pleasure to be with three really, really smart founders. So I feel hopefully I'm not, or two. Andrew, I count you as smart.
That backfired.
Yeah,
That backfired.
But no, I think happy to kind of dive in. I totally agree. I don't think everybody wakes up and is like, I want to be in finance. That's for sure. But for me personally, it was actually it was an interesting route. So I was your stereotypical jock in high school. I was super focused in soccer. Did my thing there. Never really thought college. Like I wasn't like book smart. I really wasn't. I wasn't the person who would like get a straight A student or anything like that. And my parents both are immigrants from Egypt. They came to the country. They're obviously kind of like stereotypical immigrant, try to make the best for an only child. So I kind of came in, and college was interesting because I think my parents pulled and I know, Andrew, you got one on the way to college. So you're probably going to be sitting in where my parents were sitting, where they were like, what the hell are you going to do with your life? Like, what are you doing? And I was like, I don't know. And like every immigrant parent, it's like you're either a doctor or an engineer, right? Like that's kind of the mentality. It's like you're going to be a doctor or an engineer. So short, funny story. My dad actually had a buddy who was a doctor and was like, go shadow him. And I was like, okay, cool. So he was a family doctor. I went and shadowed him, and he was giving, like, this is so stupid and super embarrassing, but I'll totally say it. He was just doing like immunization shots. So he was giving immunization shots to this lady, and I passed out. Like I couldn't see the needle go into someone's arm. So I like totally passed out. And walked out, and I was like, all right, well, that's not going to happen. So I was like, all right, engineering it is. So I actually did 3 years of civil engineering, and another really stupid, I'm going to make myself look so stupid today, but I remember this clearly. I was like civil engineering, I was doing physics, and I was at the University of Illinois in Chicago, and I went in to take like a midterm, and the Bulls were playing the Celtics in the playoffs. It was like 2008, 2007, and I totally didn't study and watched the game. And I walked into the physics, like totally know I'm gonna totally botch it and fail it. Walked into the exam, and I turned to my right, and I see these dudes, and I was like, hey, like, did you guys watch the game? And they were like, no, like we were studying, like we were in the lab doing like 1, 2, 3. And I was like, huh? And it was like a foreign language to me what they were telling me. I was like, I don't know what you're talking about. Turned to my left, same exact thing. I kid you not, took my exam, went straight to the teacher, was like, this isn't for me. Walked to my counselor's office, and I was like, I'm out. Like, I don't think I can do civil engineering. He's like, you're like 30 credits away. And I was like, I'm out. Called my parents. My dad was about to like murder me. off the phone. But what's funny, and I know this is a little bit long-winded, but what's funny is both my parents were accountants. And I was just always very good with numbers. So my dad's like, so what are you going to do? And I was like, well, it looks like finance it is. So it's kind of like a chosen path.
It's a family business.
Yeah. And it was funny because I finished accounting in, I think, 1.5 years, which was like, it was supposed to take me like 3 years, but it just clicked. And numbers to me, I know as boring as they are for many people, and especially founders, you know, numbers to me are just fun. They tell a story. They are like, I feel like I'm grading papers every day, right? It's like you see everybody else's hard work. You don't do the hard work, but you kind of grade it. So it's kind of cool to be able to see, you know, the effort of people's work through numbers and be able to state that story and talk to people. Because I think at the end of the day, you know, the money side is what matters to everybody, right? I think everybody does all these work to be able to get paid and to be able to do some fun stuff. And in this office, you know, you could be more strategic. I know in the past, a lot of people kind of thought, hey, you just stick to numbers and that's it. But now numbers really tell a story and actually give you a lot of insight and strategy and so forth in the business. So it's been super cool to see that formation over the last couple of years. But yeah, that's how I got here.
And what led you towards tech?
So I've always been very intrigued. So my career has kind of fallen into two aspects. It's been technology, B2B softwares, and marketplaces. I did one stint in media, which is not for the faint-hearted. It is definitely a spot where, you know, you could raise a ton of money and just see it blow like super, super fast. So that was a very cool learning experience, and I would do it over and over.
How long were you at Luminary?
I was 3 years, I believe. Yeah, I think it was 3 years. We raised a good chunk of money. And
how much? Wait, hang on, because you told me the story before. How much did you guys raise? Because it was like an absurd amount of money, wasn't it?
Yeah, we raised, I think, over 100 million. And it's expensive. Media is super expensive.
Through.
Yeah.
What was the company? Like, what did you guys do actually?
So it was a super cool company. It's still out there. Super, super cool company. It's called Luminary. And essentially what we did was we created podcasting, like podcast shows with high-end individuals, right? Like I believe Dave Chappelle is actually still a show that's on there, and so forth, and basically put it behind a paywall. So it was kind of like the Netflix. And that was kind of the big thing that we always say is that we're kind of Netflix of podcasting, or like the HBO podcasting. So it's super, super cool. But most of my background has been B2B software and marketplaces. And honestly, Andrew, kind of to answer your question, it was kind of one of those things where I've always been interested in, and it fell in hand with like the finance aspect and telling a story, but something that solves a problem. That's what really kind of gets me going when I'm choosing a company to kind of work for or where I end up. It's what is the problem that we're solving. And for all the companies I've had the pleasure of working in, it was always solving something that I really cared about. You know, where it comes to like, you know, I was at an age where I love to travel, and I was working with like, you know, hotel software, POSs for hotels, and you know, airlines, and you know, stuff like that, logistics aspect. Or like at Groupon, it was obviously a marketplace, but it was super cool to watch, you know, small mom and pop shops and the stories they would tell us about how we drove so much traffic where their business was about to die, and Groupon was able to get them into their front page and be able to move things, and how their life has changed from, you know, a dying business to a thriving business. And they're super happy to give Groupon that cut because of that, you know, drive through. And even at BeSmartee today, I mean, I think one of the coolest things I'm seeing at BeSmartee is, you know, we're allowing lenders to help people achieve the American dream, which is buying homes, right? I think it's something that a lot of people are, it's funny, right? I think back in the day, our parents would buy a house that was an easy thing, and as time goes, it's becoming harder and harder, and there's so many ins and outs, and there's so many crazy things that happen. But solving that problem of how to streamline that, how to be able to get people in and out quickly, how to be able to get people into their homes quickly, is something that's super cool. So that's how I've kind of fallen. It's kind of, I don't want to say more tech, and I've leaned more on tech, but it's really more the problem solving and what we're trying to do as a mission. And
right.
For the world per se, not to make myself seem like a hero, because I'm not, but
So go ahead, Chris.
I was just gonna ask, like, I know I've hit PK through the 2025. Like he said, I red pilled him by giving him so much data. Where are you freaking serious? That's how things happen in mortgage. And I explained secondary marketing to him, etc. What was like one of your first or like most impactful, like, holy shit, that's how mortgages work, like a part of mortgage process?
So it's funny, right? I bought my first home. I was like the old school loan officer sends me a PDF, you fill it out, and then you scan it back and you send it to them and so forth. And it almost always drove me nuts, where it was like the question after question after question. It's like, I gave you all my data, right? And then it's like, goes to underwriting, it comes back and so forth. And then as an outsider coming in, I was like, this is the most chaotic industry I've ever seen, right? Going into it now, I'm like, no, I get it, right? I'm mind blown with the amount of work that actually takes place in the background. I think it's an extremely hard industry. Chris, like I was telling you earlier, it's like when I interviewed with Tim was like, once you go into mortgage, you'll never leave. And now that I'm in it, I'm like, man, this thing is like, I get it. Like, it's a very, I think PK, you said it right. It's like almost like mafia, right? It's very hardcore. It's very intense. And there's a lot into it. I think for me, just the underwriting process and the amount of work to just get the information from the borrower and be able to drive it downstream, it's a lot. Like it's a lot of work. And this is the crazy thing to me in mortgage, is there's no best practice. Everybody does it differently, one way or the other. And it's crazy to me. So I see that as an opportunity, and I love it, and I preach it always, with Tim and the executive team at BeSmartee, where it's like it's such a huge opportunity, because literally there's no best practice. So I can't narrow it down to one little piece, Chris, but it's almost the entire process in whole from start to end, and just that application process, which is what we do at the BeSmartee side, of just that infusion of the POS and getting that information in so you can do all the rest of the background, regardless of where you're at. It's a tedious process, man. It's hard.
Was that experience before you joined, like the buying the home experience, was that before you joined BeSmartee?
Yeah.
I was gonna say, have you been in the process where you're buying a house and you're like, oh, this is actually BeSmartee's application, like point of sale?
Yeah, so it's funny. So we bought a house in 2022. So it was a year after I started at BeSmartee. And I was like the annoying like buyer, where I was like, your interface stinks, and you like, I don't want to go through this guy. And like it was just like going through and like nitpicking after I was like on the other side. But yeah, I mean, I think, like any industry, it's always evolving. Technology is getting huge. I think the one thing I've noticed, and when I talk to founders like you guys, it's super interesting to me. It's also an industry that is very tech stack heavy, but in a disorganized way. And what I mean by that is I've talked to many CFOs in the industry, and they all are kind of pulling their head against this as well, where it's like, you could have one company that has 3 different POSs, and they're using all 3 different POSs. You have different companies who are using 3 different CRMs, right? And they're paying for all these CRMs. And for a guy like me, I'm like, why am I paying for 3 different CRMs? Or why am I paying for different things, right? So
why do you think they do that?
They do it to cater to branches.
Yeah, I think it's a little bit to both. It's like what people are used to. It's trying to make sure everybody's happy. And I think a part of it is just fragmented fragmented organization within the organizations, right? There's no one that's really overseeing the forest, and you're seeing just a bunch of trees and everybody's sticking those trees in. And that's where really a CFO really needs to step in, right? A CFO really needs to step in and push. And that's where we become very strategic, where it's like, hey, like we're, to process a loan, it should cost us, $50, $60, but it's really costing us $130 because we have all these different systems across the organizations and 3 of them we're not using, right? So that's really where the CFO shines and really steps in and is like, hey, like we got to think through this. I get it. We want to make everybody happy, but what's the best approach to do this?
So I'm going to back up for a moment because I don't even know if you can answer this question or not, but I know So what I never really realized about Groupon was that Groupon is a relationship business, right? So like, yeah, you guys all know, like you think of Groupon, you think of like the mom and pop escape room who's like trying to get people in the door, or like the new little restaurant. But the reality is Groupon's like big money, at least as I understand it, is getting like whales, right? To like come onto the platform where it's like they're going to make an absolute killing, right? Mina, can you tell me, I'm curious, I don't actually know the answer to this. What was the biggest expense report you saw during your time at Groupon?
That's a tough one because I've seen a couple. So I think the biggest one I actually saw, I'll give you this, was and I don't know if this was necessarily an expense report, but I'll say it's an expense that we had, was actually a Super Bowl commercial. That was probably the coolest thing.
Okay, all right.
That was the coolest thing. I think from an expense report aspect, I mean, we've seen some funny stuff. I think in every company you see some funny stuff.
Oh, for sure.
I've had people, bring in, taking, customers to dinners, and that bill runs up to like, 5, 7, 8 grand, and it's like 3 people, and you're like, wow. And people kind of stack it up, and sales guys, Andrew, I'm sure you'll love this, but finance and sales are always like, what are you doing? like what's happening right now? But
and then it's always the guy who closed nothing this month.
Yeah, exactly. So it's like hysterical. I think one year we did like on our all hands, our finance team did like the most ridiculous, like didn't expect this in our forecast, like expense. And it was like somebody who like put in an expense for like toilet paper or something like that. Like it was something so ridiculous that they were like, what do you do? Like, come on, man. So we've seen, you see, and that's the bigger the company, it's actually the funnier it gets. Because I think people just feel like, they could just kind of sweep it through the rug. But finance is watching. Finance is always watching.
That is all too true. So coming back to BeSmartee, there are actually some people who may be watching this who actually don't know BeSmartee. Do you mind talking just a little bit about, who BeSmartee is and what you guys are solving for?
Yeah, I'd love to. I'll give you the non-technical answer that I give everybody because I am not the technical guy. But essentially, we have 2 products. We have a mortgage POS and a commercial side financial spreader. So the mortgage POS side is a very cool product that I'm actually very proud of. It's super feature heavy, but essentially we are a white label software that essentially inputs and gets people to input. So imagine you filling out an application, you're filling that through our point of sale, that white labeled software, where we gather all your information, your taxes, your bank accounts, basically everything you need to be able to fill out a mortgage application. And we're able to kick that down to the LOS, so the loan origination system where LOs live, to be able to push it all the way down the flow to underwriting and be able to solve for that. The coolest thing for us and what we solve for is, technically it takes close to like, 30 minutes to be able to fill out an application on average. We've been able to knock that down way faster. I think our clock in time is like 14 minutes or 13 minutes, or maybe it could be 10. I'm not really 100% sure. And as a result, what really leads to that is we have an industry best that we're able to get people and companies to get submission rates to go up to about 85 to 87%. Where people, so meaning when somebody starts an application and actually hitting submit, that's around 87%, where really industry average is closer to like 40 or 50%, I believe, right? So people starting applications and just getting annoyed or saying, I'm going to finish it later and so forth. So our process is very quick. We have a lot of API integrations to gain your information, be able to kind of move it quickly down the stream. So that's kind of our mortgage POS side. And then our flash spread product is on the commercial lending side. And what that does is it takes tax documents and basically does a spread to financial documents, because that's where underwriting makes decisions based off of just a balance sheet and income statement and so forth. So we have a very cool product that really converts your tax information into financial documents. So two really, really cool products. Been able to see the fun side of mortgage on the mortgage POS side of how hard that is and how tedious that is, and how every single customer has a different flow, and we have to accommodate for that. And we work really hard, and our team works really hard to ensure that our customers are getting the best of the best to be able to get you the highest submit rates. And then on the flash spread side, the commercial side is kind of blown away for us. Like, I've been very surprised with how commercial has worked over the last couple of years. And it's been super interesting. I'm not an expert in that space, but from what I'm seeing from the numbers, like it's awesome. It's an awesome space to be in.
Well, and to add on, and maybe I'm spilling the beans too early. So David King, sorry, not sorry. But you guys also have a automated commercial underwriting scenario desk. God, that was a fucking mouthful, wasn't it? I guess we could come up with a better way to do that. For commercial clients, right? Which is the first one out there. I mean, there's a lot of underwriting scenario desks in the residential space. You guys are the first one in the commercial lending space.
You're telling all our secrets out, man. What's going on?
Right.
David's gonna be upset with that. I can't come out there and take his thunder like that.
Yes, I will.
Yes. We are rolling that out, or we started rolling that out in 2026 here. So we're super excited for that. I think a lot of our partners are super excited for that, from what I'm hearing. And I think that's why the commercial space, I think, is really an interesting space to be in right now. We're really glad to be in it, and I think it's going to solve and help a lot of companies. So we're really excited for that.
It's interesting because that's a space that seems a little bit more ignored. Like the residential mortgage space, like everybody and their grandmother is like ready to jump in, and it's like you look over at commercial, and it's like nobody seems to want to go hang out at that party for whatever reason that might be.
Andrew, I don't think you were here for our call with Daniel. Chris and I had a call with Daniel of Alfie a couple weeks ago. Yeah. We were thinking about entering like that commercial lending space as well at one point, because they would keep coming asking us for like this kind of like, it sounds like what you guys have built, which is like this portal where like their clients can like upload all their documents, and it sounds like you guys are doing some maybe review on top of it. But it just didn't make sense for us. Like, it was a pretty significant pivot if you want to go down that path. But
right.
And Daniel was also running into that issue. So like, it's interesting to hear that you guys are also entering that space. But very cool. There's definitely a market for it.
Yeah, I've been pleasantly surprised. I'll tell you guys that. I think Andrew, you hit it right on the head. And PK, thank you for not going and building that. So I appreciate that. But
you're welcome.
I think for us, I think it's I don't know what it is. I don't know if people just kind of see commercial as like, oh, these are going to be big ticket items. I don't want to deal with it. I don't want to, like, they're going to be sporadic. but it's been a very interesting couple of years for us on that side. And it's all been good. I mean, we've seen really, really good results. We've seen a lot of people really adapt to the products. They're sticky, and they work. They work much faster than mortgage. I feel like I think
they're more entrepreneurial, like a lot more snappier.
Yeah, maybe. Yeah,
commercial's a lot more riskier, and it's takes longer, and the financials of it are more complicated. It's much easier to get a guy out of college who wants to make a quick buck, and he becomes a loan officer, and he gets his SRP, service release premium, and he's off to the races and doesn't give a crap about that property anymore. Commercial's a little bit more risk. You got to be sticky. You got to be in it.
Yeah, and I've it's funny, Chris. I've heard that 100%. I've also heard people be like from our experience so far, right? It's actually it's like while mortgage has gotten the hit that we've all felt the past couple of years, commercial has kind of thrived in a way. So it's been really interesting to see that.
That is interesting because I've see more empty office buildings and more failed businesses around my city in Utah.
Totally, absolutely, and that's what I thought as well. But I don't know what it is, but I've seen that industry do well, and I think as I feel like as humans we have a goldfish brain sometimes, so we tend to forget kind of like the COVID years and what's happening and so forth. And I think people are slowly. Like I'm seeing companies go back to the office. I'm seeing people kind of slowly kind of get back. And I think there's investments there. There's people that are doing there. So it's a very interesting space. I honestly, I'm trying to wrap my head around it. I haven't solved it yet. So I can't say I have all the answers, nor do I expect to have all the answers.
As long as the money keeps coming in.
Exactly, but it's great. So I'll take it. I can't complain.
It's like I'm grading papers. I'm grading that P&L. Is that a big number? Is there parentheses on this spreadsheet or no? Mina, so I'm not going to put you in here as like an expert in the space of AI, but I do want to ask you just your opinion. How big of an AI money bubble are we in?
Big, very big. It's interesting. That's the $1 million question.
Billion.
You gotta say huge.
$1 trillion.
Exactly right. I'm hearing multiples from 40x to 30x to to 20x. I think it's starting to simmer down a little bit. But what's interesting to me, again, I go back to the storytelling aspect, right? Even from a PE-backed aspect or a VC aspect, right? It's all about the story. Right. And that's why they look at the numbers. They want to grow the businesses 40, 30, 50% and so forth to be able to get that exit. We're long behind the days of, burning cash, just get growth, top line up, and then you're good. That's no longer the case. And I appreciate that. I'm very happy for that, even though some people aren't. I think running prudent businesses that are cash flow positive, EBITDA positive, is super important. But I think right now, I don't think anyone understands AI, to be honest. I know it's a hot take what I'm about to say, but I don't really think anyone understands it. And I think everybody's just excited about it. I'm seeing companies just throw AI in their websites, and then you jump on a demo or you look at it and you're like, that's OCR. That's not AI. like you're not building anything AI related. So it's interesting. Will it last? I don't think so, Chris, to be honest. That's kind of my take. I think multiples will get down. But yeah, it's hot. I mean, people are running to it, and for good reason.
I know there's a bunch of companies that are building tools for like the CFO suite, which I don't know if they existed quite a bit. Like there's Runway. I don't know if you've used Runway. Ramp is a big one. What are you using those tools, and like, are you seeing a lot of products being built in that space?
We use Ramp, and I'm always proud to say I was one of the first Ramp people to jump on their platform. So shout out to Ramp. But I think, yeah, I mean, there's a lot of tools out there. I know even JP Morgan is doing some stuff around like cash flow 360 and stuff like that. And there's a lot of AI that's being thrown around. As a CFO, I always get the 40 emails a day of salespeople being like, "Can you close the books faster? With one press of a button, I could close your books magically," right? And you're like, "Okay, cool. Show me." And it's like, well, no. Like, we're really good at like aggregating the data for you. And it's like, yeah, so does QuickBooks. QuickBooks does the same thing, right? Like, how are you AI? So I think everybody, at least in my world, I feel everybody feels like AI is going to be just this button that you press and all of a sudden magic happens. And then you're like, great. And that's just not the case yet. Will we get there? I think so. I think we will. But I just don't know if we're there yet.
What are your thoughts on all the companies that are trying to go after the QuickBooks of the world? Like they're trying to like compete with them, or like the startups, basically.
Good luck.
We've talked about this. Mina and I have actually talked about this because Mina was bitching so much about QuickBooks.
I can't stand.
Everybody bitches about it, and so wait, this is great. I love this coming up because everybody's like, QuickBooks sucks. I hate QuickBooks. I hate QuickBooks. And I think most people know that Tim, who owns BeSmartee, is my co-founder. And at one point in time, we were like talking about other things, and I'm like, well, shit, why don't we just build a QuickBooks filler? Like everybody fucking hates it. I mean, it was like absolutely not.
Yeah,
so you're not talking about that meeting because like I don't think a lot of people are like, oh yeah, like we should just I'm gonna vibe code a replacement to QuickBooks.
It's tough. It's funny. So the bigger companies, Fortune 500 companies, and specifically at Groupon, we use NetSuite. We actually were NetSuite before Oracle bought NetSuite, so that was super cool to see that kind of transformation.
You're dating yourself.
Yeah, so I am an ERP NetSuite guy. Sage will hate me. QuickBooks will hate me. But I do love NetSuite, and maybe just because kind of growing up in my career, that was the main system I used. So I'm a big fan of it. I think it's a great system. QuickBooks is great for startups, but it's tough. If you don't have a good, if you don't have a good CFO or you don't have a good finance team, it's very tough to manage QuickBooks because a lot of it is actually done externally. QuickBooks is just a ledger. That's really what they're good at. And I know people are going to hate me being like, oh, they have all the tools and they have all the reports. And it's like, yeah, but it's also super tedious. It always breaks down. If you're a big company and I have a lot of data, it's impossible to infuse it all in there. So there's a lot in there, but they've been doing it for God knows how many years now. And they've built a machine. You're Joe Schmo coming out and being like, hey, I built an ERP system. Great. Are you going to give me that ERP system for $80? I highly doubt it. Highly doubt it. You're just not going to be able to compete with them. So I think, can somebody build an ERP? Yeah, absolutely. But to be able to compete with those giants, like, I think it's almost nearly impossible. Like, that would be my take on it.
Gotcha.
PK, are you in a nightclub this week? You were in prison last week. I'm trying to figure out.
It's a co-working space.
Some hopping co-working space you got there going.
I'm back in San Francisco.
So, oh God, I thought you were leaving San Francisco. Are you moving? New York? Are you going to move to New York? I thought you were moving
to Salt Lake.
Nobody wants to move to Salt Lake. Come on, dude.
What?
No single,
we'll see.
Yeah, single guy in his 20s. Go to Salt Lake.
Okay, Fort Wayne. Let's throw some stones over there.
I wasn't offering my city as an option. You're the one who threw your city out there.
Salt Lake is amazing.
Yeah, it's hopping. PK, you can meet a nice Mormon girl. Okay, Mina, quick question. If you could automate one part of your day, what would it be?
My meetings. Can I automate meetings? Is there a way to automate meetings? So many meetings, man. I think I start my workday at like 6 p.m. every day, just because of all meetings all day. No, I think for me, being able to get a pulse on a company in any given moment is super important to me. So it's funny, right? I think, again, everybody kind of thinks the finance section is always just looking at the numbers and the numbers, but it's delivering real-time statuses to ensure that those numbers will be hit. So looking at the CRM. So I would always, I know there's like Tableau and there's these other tools that kind of live, and you have to have a data, like a data software and like be able to get all the data in there and then have Tableau live on top of it and be able to get it. That's what I'm kind of used to, which is great. And it's awesome to be able to look at it. But I think, us poor, startup folks, I would love to see somebody kind of come up with something like a Tableau, but that can be able to not have a knowledge hub or a data hub. It could sporadically go into all these different systems and be able to track things for me and get it out. Because I think right now it's just, it's all worksheets and it's all trying to validate the data and make sure the data is right. And is the data, so like something that would be able to get us there, that'd be awesome. I'd love to automate that, but.
Explain that again. I think I know a guy who built it.
Not you.
I mean, it's a data set.
Yeah. So yeah, exactly. Actually, like Ask Bob, I think that
we might want to talk after this call.
Yeah, I think like Ask Bob, but I think more financial. So things that would be able to drive more of like KPI flows, right? I'd be able to see a graph of where my run rate is. Be able to be able to build that stuff would be super cool. QuickBooks, I think, tries to do some kind of layering, but it's not super accurate. And again, right, this is just more the customization aspect of me. I just like to see things in a specific way. So I'd love to see somebody automate that.
No. It makes total sense. And the ability to see it in a natural language state, I think is a really interesting idea, because to your point, it is just telling a story with numbers, right?
Exactly.
At the end of the day.
Hey Mina, what have you guys seen from a contract requests from lenders in 2025 and 24 versus 2020, 21, 22, where it was like, yeah, we'll sign a multi-year deal, and now a lot of people are asking for no minimum. Well, I'm gonna put words in your mouth. No minimums, lower lower commitments, etc. Options to get out, all those things. But just tell me, what have you seen over the past 2 to 3 years and how that's shifted?
Yeah. So when I came into mortgage, it was interesting how the model and the contracting model was built. And I think if somebody looks up the word maverick, they should put like a picture of some mortgage like people in there, right? Because they're gunslingers, man. So when I came in, people were signing, 5-year contracts and, minimums up the wazoo and being like all foreshadowing, the COVID years were like, I'm going to do 300 loans a month and it's going to be amazing and so forth, right? So I actually came in at the downturn. So I was dealing with those guys where everybody was like, how many loans are you doing? Where it's like, I'm doing 10 loans. But your contract says you were going to do 300 loans. Like, how does that work? So I think, to answer your question, I think the market has adjusted just due to the circumstances. So what we're seeing is people come in, they're kind of under, like, they're doing 20 loans, they're signing for things that are more like 15, 10 loans a month, right? Little bit less runway. Instead of it being 4 or 5 year, 6-year contracts, we're seeing 2, 3-year contracts, right? We're seeing people come in. The one thing that has been great and has been very receptive, which I'm glad we switched to, is historically in the mortgage space specifically, it was always very usage-based models where people were just doing, hey, I want to, my cost per loan should be $100, charge me over whatever loans I do. What people have come close to is understanding that, that's probably not the best way and you're leaving some money on the table or you're losing money on the table to do that. But if you smooth it out, it helps both sides, as a SaaS company, as you as an individual, where it's like, let's do 10 loans at, 50 or 75 bucks a month or per loan, but that's your minimum. And just let's sign up for that on a monthly or annual basis or quarterly basis or whatever it may be. So I've seen people be receptive, but I think right now the market is kind of shaking out to be like 1 to 2 years max is where people are signing contracts. But the minimum aspect has been great, where people are very adapted to minimums and being okay with that and going away from that usage model that they've been used to over the years, which is great. I think that's a great sign for the industry, to be honest.
Mina, what happens in that situation? Like when you show up in 2022 and the market's going down, and maybe there's existing contracts that are like for 5 years and people are hurting. I'm guessing either they stop paying and then you got to go collect, or do you just restructure it and like work with them, or like how do you think about that?
Yeah, so I was some people's best friends and I was some people's worst enemy. So it was super interesting. So for us at BeSmartee, it was actually a really cool, and it made me proud. It was a very proud moment that I felt, and not saying this, I'm truly saying this genuinely. It was a really cool moment when I came into BeSmartee that I chose the right company. Was I had more people try to exit out of their deals because they made so much money in the past few years because of how fast our product was getting people to submit. And they were if they were closing on 1 or 2 loans, our product helped them be able to close on 4 or 5 loans. And thus they made enough money that I saw it was a weird phase where people, like in our contracts, we state like, if you're going to exit out early, you owe the full amount of your contract. And it was a cool experience because a lot of people were like, hey, listen, the market's crashing. I'm not interested to do this for a downturn right now. I made enough money. I'm going to go hit the Bahamas for the next year or 2, and then I'm going to come back and turn it back on. Can we do a pause, or can I just pay you for the full contract? And then when I come back, we can talk. So that was a cool, very odd situation, but there was definitely our fair share, PK, of people on the opposite end of that, to your point, where they're like, hey, I have a 5-year contract and, there's no way I'm going to be I'm trying to figure out what to do. I had one founder who was like, I'm doing Uber on the side. Like that's how bad it got for certain people. Right. And, we worked with some people on hardships and kind of pausing the software and so forth. So we tried to be really industry understanding to the best of our ability. It was tough at times, but we really helped some people out. And then there were others where, we cut our losses short, or, we agreed on an idea of like, hey, yeah, maybe 5 years is not great, pay out this year and just call it a day and so forth. So it was a wide spectrum, but I would say I was actually very proud to see that a lot of people, like it was weird. I never saw that in any industry. A lot of people
wheeling and dealing.
Yeah, and a lot of people were true, and they were good friends of Tim, or they started with Tim early on in the POS side, and they were like, listen, man, I've made so much money over the last 2 years, I'm ready to go to the Bahamas for a couple of years and take some time off. So that was super cool to see that.
Very cool.
Well, it's interesting too, though. I feel like in that scenario, it also, a lot of it, and this is, I don't want to say a lesson for customers, but maybe there's not a better way to put it, is have that conversation. I know in a former life, I've had scenarios where people just ghost you. And it's just not the right, we're all humans. It's not the right way to go about it. It's get on the phone, have a conversation. Most
they have an
people,
avoidant attachment style.
Most people are reasonable. You know what I mean? But it's if you just full on ghost me, it's well, I've no other option but to fully charge you, and I'll put your ass into collection. I don't know. That's harsh, but it's
yeah, and it's never fun. I mean, don't get me wrong. I think sometimes when I'm talking to people, they think it's like we're getting a kick out of it. It's really not. Honestly,
right.
Well, there was a large acquisition that took place in 2025. One of the top 10 lenders, And what they did is they kept their company open and just shifted everybody so that they basically called and said, yeah, we're not going to pay you. And there's only 4 of us working here now. And they just, I saw the guy at a restaurant and he wouldn't make eye contact with me. It was a large lender, extremely large, like the biggest acquisition of the year.
What was the scheme?
Instead of if they didn't buy their company that had all these outstanding contracts and whatnot, people all left that company, and then there were like 2 or 3 people stayed behind, just legal and accounting, that were just like, hey, like, I'll give you $500 or something. Yeah, like, what are you gonna do? Sue us? It's like, welcome to it. We've got we've got 10 grand in the bank. It was really
That's
shady.
Wild.
Well, but here there is a flip side, and I don't think people like think about this. Is in my opinion, anyways, is and you know, to the point on this, like, I mean, generally speaking, most of our contracts are 2 years, but we do get a lot of people who are like, no, I won't sign more than a year. And I'm like, okay, that's fine. Like, that's fine. We'll do that. But I do think there's something lost that people don't realize. Like, you know, when you sign a longer term contract, you get a freeze on pricing. When you sign a 1-year contract, like, don't be surprised when you come back in year 2 and the fucking price became more expensive.
And especially when the software is something that you can't let go. So I had a time whenever I was like, we barely, very rarely ever, like, we've got people that are in like 7 years, they haven't increased their price. But we had one where we're like, hey, we're going to increase our price for this product by, it was going to be like 15%, which was like huge for us. But it was like, hey, like, and we gave them all this why. And then they were like, can you give us some more, like, can you give us more formal stuff? And like, we'll go through legal. And I was like, well, your contract is literally month to month. And it's just, it's clearly, this is how I can do it. It's just send you an email and like tell you what the current price is. And they're like, thank you for never doing that before. Can we actually lock in pricing?
Yeah. I mean, I think it's always funny, right? And I think what people tend to also forget is we are on the opposite side. We become buyers as well of other softwares. So we see this type of things, right? And I think, like, I always, and I'll tell this to my team all the time, if a vendor is coming to you and is like, hey, annual, 2 years, whatnot, to your point, Chris, right? Lock it in. But also, what's the discount? Because if I could pay monthly at the same rate, I'll do that, right? So what people don't understand is, from a pricing aspect and from a modeling aspect, we do that. Like, if you go monthly, it's going to cost you more, right? Not even just like renewal aspect, but I'm going to kick up my price because now there's overhead to that. I have to invoice on a monthly basis. I have to track collections. There's risk of you not paying. There's all that stuff, that aspect that I have to build into place. So I have to upcharge you on that. The second aspect, I always kind of do this with all the founders I work with and the CEOs. It's like, listen, we should be proud of our product. So our product should be sticky. And if somebody wants to sign up for a year, to your point, great. I'm never going to shut down anyone to sign up for a year. It's just not to your benefit as a buyer, because what's going to end up happening is my product is sticky. I am proud of my product. The product is going to be awesome. You're going to love it. And to your point, when you come back next year, there's an upcharge, right? There's stuff that we built that you might not be able to. The last thing is, I always tell the CTOs and our CEOs this is, who's our long-term customers? And those are the ones we prioritize from a product roadmap, because those are our loyalists, right? Those are the people that are around. So if you're a 1-year guy and you're asking for this feature, more than likely our ROI return on that is not there. So we're not going to take it into account. But if you're a 5-year contract guy, I got to make you happy. So I got to make sure that I am prioritizing you in my product roadmap, and I am making sure that you're happy with where we're at. So I think there's so many variables and there's so many toggles in that question that it becomes very tough to really be able to manage it. But it is what it is. It's the beast.
Mina, do you see how do you I guess, like, from a CFO perspective, like, when you say, let's say, annual prepayment, is that like something that's like hot in the space, or is that kind of frowned upon, or What's been your experience with all of that?
It's how you stage it. So I always tell the sales teams is how you stage it, right? Everybody will want to play less upfront. It's just human nature. We all are like that, right? But in all honesty, from a financial perspective, if you're building a company, I always tell some people like annual is your best friend. Because annual does two things. It shows commitment on both sides, right? You grab the money and you have to deliver on the product, right? And from the opposite effect, there is commitment, right? I'm not going to be in here for a month or two and then I'm going to bounce. So it works both ways. Like, I think a lot of people think, oh, you want annual, you want to do a money grab and run. That's not the case, because if I don't deliver on my product, I have to pay you back. So I have, like, contractually, I have to do it. So I think in the space, it's been received really well. It's also, like I said, I look at it from an overhead aspect. If I have to do 12 invoices every month for you, that takes time from my team. So I got to charge you for that. Like, that takes effort. That's an upcharge to you, even as little. Like, some people will be like, I know a lot of founders, and Andrew, I'm not going to pass this to not state this, but the founder math, right? It's like, oh, if we have so many customers, who cares? And it's like, well, no, operationally we do care, because it's going to take a strain. Now I have to hire, maybe 2 bookkeepers if I have 300 customers who are doing 12 invoices every month. When if those 300 were just 1 invoice per year, now I need 1 person. So I just saved, as funny as it is, but I just saved, X amount of dollars by not hiring a head.
Well, and also there's a lot of upfront cost, right? Like, I'll just look at our product. It's like, most of the cost like is front loaded with our clients, right? So like, if we have a client that wants to go month to month, it's like, I'm actually down on that client for the first couple of months, right? So if they bounce and now I'm like chasing after them, like now it becomes like, the potential of like, you lost money.
Yeah, it's always, that's your CAC, right? Your CAC is always that you got to make up your CAC, and usually CAC in a SaaS industry, it's close to 12 to 18 months, right? Is to make up your money on something.
Oh God,
so
don't remind me. Okay, so Mina, in your founder math joke, you do have an affinity. It's the sadistic side of you, but you have an affinity for founders. Like, there's no world in which Mina goes to work for fucking Salesforce, right? Or Accenture or anything like that, right? Like, if Mina's not directly next to the founder, I don't know that Mina would be willing to work there, right? So I'm curious to know, what is the most underrated quality you look for in a founder, or the most underrated quality that people just don't take into account of founders?
A founder that says, I don't know. I think a founder that says, I don't know, is the founder you want to work for. The reason I state that is,
want to work for me.
I think the smartest, and I'll just speak out of experience, right? The founders that I've seen are the smartest, are actually the ones that surround themselves with the smartest people. And they strive, or they love to live in organized chaos and organized tension, meaning having really, really frank, honest conversations, being able to say, hey, we screwed up here. We didn't know. Let's move on. Let's go quick, right? Mm-hmm. The life cycle of startups is interesting, right? And I don't think a lot of people understand this. Getting to $1 million of ARR is really hard. Like, that's a huge, hard milestone. Getting to 5 is super hard. Past 5, scaling appropriately shows the kind of founder you are. So what I'm used to, or what I tend to see, is a lot of founders can't break past the $5 to $6 million. And that's because they didn't scale it correctly from the beginning, because they thought they knew everything and they did everything, right? They They want to be marketing. They want to be sales. They want to be product. They want to be tech. They want to be everything. But founders who are like, listen, I know what I want. I know what I need. But I know I'm not good at X, or I'm not good at Y, and I need to entrust someone and push someone and hold someone accountable. Those are usually the most underrated aspect of a successful founder, to be honest.
All right.
Are you saying that?
I
had a quick question. I got a quick question on that one. What I was gonna say is, are you saying to, like, for example, going 1 to 5, 5+, whatever, it becomes more people oriented, like who you bring onto the team and things like that? Is that what you're saying?
Yeah, I mean, right. I think the founder mentality is very simple, right? I can do, and I have the greatest respect for founders, right? In the sense of, I can't do what they do. Founders can do 17 different things all at once, and they can think about different things all at once. They can multitask like crazy, and they could complete a million things all at once, and so forth. Some of them can't connect everything at once, which is interesting, but they can do a million things at once. And I think the mentality as they're doing it is they believe everybody else can do what they're doing. So as you scale, your expectation becomes, oh, at 5 million, I have a bunch of PKs around me, right? And everybody's doing exactly how I used to do it. And you lose track of that. People don't tend to do it. You lose and again, I'll say this very clearly because I think a lot of people misunderstand this aspect. Founders like shiny things, and successful companies do the boring things, the day-to-day boring aspects, right? The sales rundown, doing the product stand up, looking at our product roadmap on hourly, if not on a minute aspect of understanding where our team is, what's our velocity, what's this, all that stuff. Founders tend to lose track of as the company grows, because they don't care about those numbers because they're doing it and they understand what they're doing, so they don't care about it. So as they scale up, they tend to think that everybody else can do that. But when they surround themselves with the right people and they say, hey, I don't know how to hold people accountable, or I don't know how to look at this appropriately, those are usually the most successful founders. Mm-hmm. And doing that earlier is better than later. So I think some people also wait for the PE firm to come in and to, instill the executive team and to grow and so forth. Sometimes that's too late, because then people are coming in to clean up stuff, and you're always in cleanup mode and not expansion.
Right. All right. So we got a couple of minutes left here. As always, we have the question from the previous week. Aaron Wester from Optimal Blue wants to know, what makes the best executive or senior leader partner to the CFO?
Ooh, that's a tough.
Not the sales guy.
Yeah. I think every executive officer is really important, to be honest. And I think obviously the CEO is probably the most important to the CFO, because nobody listens to the CFO, but everybody listens to the CEO. But if the CEO is working with the CFO well, it kind of trickles down. Because ultimately, right, I think everybody on the operations side and the technology side is always go, 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 go. And everybody forgets the aspect, right? Like sales, for example. Sales guy will never want to lose a deal. But if you look at the deal, you're like, yeah, you're losing on this. Like, it's going to cost me money to bring this individual in. And sales guys don't like that, right? What do you mean? Because they're looking at, their commission, and rightfully so. Like, that's human nature. That's how it should be. So no knock on anyone in that aspect. But I think, the CEO is really important. I think second to that has to be your CTO or COO. I think understanding the product. I think some people tend to think your CRO is super important as well, which they are. But really, you can't sell if you don't have a product, right? So really understanding the product and understanding the technology and what goes into the technology really helps you be able to help the CRO and drive results over time. So I think I would say in that order, I would say CEO probably number one, just because I think that's your partner in crime no matter what, and that's who you're working with, especially in front of the board and investors and so forth. And then I think, you know, the rest of the officers are probably they're just as important, to be honest. But I would say CTO, COO are probably your next tier of importance.
All right, there you go. And our guest next week is Melissa Langdale from Praxis Lending Solutions. What question do you have for her, Mina, that you would like to know?
So actually funny, Andrew connected me and Melissa this morning. So I spoke with her this morning.
It is funny that it is funny that worked out, actually. It is funny.
So that's awesome. But yeah, Melissa's awesome. And I actually, after talking to her, thinking about this, I would actually ask her, you know, if you could redesign one part of the lending process to be simpler and more human, what would it be? I think she's got a lot to say on that, and I'm interested to hear it. I think she gets it. So I'm super excited to hear her out on that.
All right, there we go. And I've got it, guys. I have it actually typed out so that I won't forget. I know. The boomer is all over it today, man.
New year, new you.
Boom. That's right. 2026. My New Year's resolution is to make it to 2027. All right, ladies and gentlemen, Mina, thank you so much. Appreciate the time, brother.
Thank you, guys.
Always good to talk with you. And we'll see everybody back here next week with